Hi, and welcome to the weekly Fundamental Podcast. I'm Rini Mehta, and here I bring you key updates from the world of stock markets and top stock picks straight from our research desk. So let's jump right in. Starting with the domestic markets first, Indian markets continued to rally with both Sensex and Nifty gaining around 1.5% each during the week. Nifty was at 17,840 on Friday, while the Sensex was at 60,020. Small cap and mid cap indices underperformed during the week. BSE mid cap index gained just 0.6%, while BSE small cap index lost 0.1%. Recently announced reforms in telecom, auto, and banks boosted the markets. These sector specific corporate announcements and actions provided a boost to media, telecom, and real estate sectors. Now, global markets were volatile amid worries coming from the Chinese real estate sector, as Evergrande, the second largest developer in China, is on the verge of bankruptcy. Also, Federal Reserve is expected to start some form of tapering by the end of 2021, and once that happens, market may see some reversal. US markets were flat during the week. However, till now, Evergrande issues looks localized, and Chinese policymakers should be able to handle it using steps like restructuring. Global investors are also hoping on the regional containment of the crisis in China's real estate market. Moving on, FPI flows are expected to remain volatile in the emerging markets once US Fed increases the rate. Post the rate hike, FPI will start exiting emerging markets as they considered it's riskier compared to the developed economies. All the major emerging markets witnessed FPI inflows in the month of September 2021 till date. Finally, coming to the top stock picks, guys, you can consider buying PVR with target of rupees 1700. We expect PVR's business to recover over second half of FY22 as COVID restrictions ease. Pent-up demand can potentially drive a surprise. Disney's decision to discontinue simultaneous theatrical and digital release of movies validates relevance of theaters and alleviates concerns around structural risk from OTT platforms. PVR is trading at 14% discount to pre-COVID valuations, while several consumption stocks have re-rated by 30% plus. There is room for some re-rating as operating metrics recover. So we retain buy with revised fair value of rupees 1700 from 15,050 earlier, valuing it at 12.5 times September 2023 estimated EV EBITDA. Our next pick is HCL Tech with target of rupees 1400. The company's revenue growth will catch up with peers starting September 2021, driven by deal ramp-ups and further recovery in ERD. HCL's strength in digital foundation deals, improved share in applications, and solid ERD business positions the company well. Deal momentum is reasonably strong. We raise FY 2022 to 24 revenue estimates by 1 to 2%, EPS by 2 to 2.5%, and fair value to rupees 1400 from 1175 earlier. Stock at 21 times September 2023 estimated EPS still offers reasonable upside. We retain our constructive view and add rating. Lastly, our pick of the week is Zee Entertainment Enterprises with buy rating. As most of you all know, Zee board has approved a potential merger of Zee and Sony. This deal values Zee at rupees 250 per share. Sony would be the promoter of the merged company and have the right to nominate the majority of board members. This deal would put an end to governance concerns and improve probability of success in digital. Revenue and cost synergies could be in the range of 5 to 7% each over the 2 to 3 years in our view. The merged company could become India's #1 broadcaster with about a 30% viewership market share and a portfolio with meaningful strength in Hindi and regional entertainment and presence in sports and digital. We raise fair value to rupees 400, valuing the business at about 22 times 2-year FY 2024 estimated potential earnings, including synergies. Key risk to this call would be a deal not fructifying due to Sony's change in view post due diligence or lack of regulatory approvals. Even then, we expect shareholder activism to end governance concerns. So, guys, that's all for today. See you again next week with more market insights. Thank you and happy investing.